Hello and welcome to the Wendell Effect for the Indian markets. My name is Brandon Wendell. I'll be your host for this week's video, taking a look at the Nifty and several securities from the NSE. Anyway, we'll go ahead and take a look at the markets. Just reminding you that we are not registered broker dealers or investment advisors. Taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. Again, make personalized recommendations. The markets always involve risk of loss. There's nothing we can do to eliminate that. All we can do is try to manage the risk, and basically, just be aware that you could possibly lose if you invest in the markets. We're not subject to any trading restrictions, so we got a position of security or initiate one at any time. So we'll go ahead and kick this off and remind you, before I do that, remind you that if you want to stay in touch with me, please email me, brandonwendell.cmt@gmail.com. You can also follow me on Twitter and email me or message me there as well if you got any questions. And please make sure you hit like and subscribe for this video so we can continue to bring you some good content and good information going forward as well. So starting off, we'll take a look at the Nifty for the past month. You can see mixed bag. We got a lot of red up there, but also balanced out with a lot of green. So no real trend in any particular sector either, other than technology looks a little strong. Looking at the last week, the green lightens up a little bit. You can see the last month versus last week. Finance picks up a little more green. So a little bit of a boost there, possibly in the bank Nifty as well. Anyway, taking a look at the Nifty as a whole, the seasonal movement for that over the last 15 years has been slightly mixed, really. I would say almost sideways. I mean, we did have 2020 was very bearish, but other than that, it was sideways. You know, the average return was about -2%, but that's mostly because of that 1 year throwing off the average. So looking at the Nifty itself, you can see on the weekly chart, we are in a bit of a downtrend. We've retraced over 3/4 of the previous impulse up. And I don't see us going anywhere but sideways right now. The momentum looks very, very weak. Not bearish weak, I'm just saying sideways weak. So I wouldn't be surprised to see a very small candle, very small range going on this upcoming week. Looking at the daily chart, you're also seeing that we had an impulse down. We had a positive divergence that led to a bounce, but really it looks like we're going a bit sideways now. And we have fresh overhead supply at 18,000, and it's not really a demand below, but I do see buying pressure kicking us up from 17,000. So we may just end up going a bit sideways here around the 17,800 level for the next week. On the 4-hour chart, same thing. You know, we had that positive divergence give us that pullback and then nothing. So I don't see a lot of momentum in either direction. Could be some good intraday opportunities, but as far as the swing trades or investing, it doesn't look like it's going to be a very good return for this week. So looking at Reliance, 60% of the time over the last 15 years, we're going into a slight bullish area. The average return's a little negative because, again, 2020 throws everything off. But taking that out, it looks relatively bullish, but a bit choppy as well. So looking at Reliance on the daily chart, you actually see that we are impulsing down still. We did pause at our first projection. Basically, I measured impulse, correction, and there's our impulse down. We paused, which means our next target would be 2180. So Reliance is looking a little bit bearish right now, and that might hold the market to the downside as a whole. Overall, we do have plenty of bearish momentum trying to push us down towards that 2250 area. So I would lean a little more towards the short side there on the intraday opportunities. Here we are. Oh wait, I'm sorry. Was that last week? It was. So basically, again, we went a little sideways here. You can see we did have a positive divergence, but a very weak retracement. So it does look like we are going to continue to move a bit downwards, possibly break 2300 this week. Looking at TCS, you can see that we are continuing to move back up. We had an impulse, we corrected down, and we've paused at our 61.8%, basically 3,500 for the first target, but we're moving on our way up towards 3,700. And at 3,700, we have that supply zone as well as a projection. I don't think we'll reach that this week. We just don't look like we have a lot of momentum. We are above 60, so it is very bullish, but just not very strong. So it looks as though we'll continue kind of in that same trajectory, getting us maybe a little above 3,600 this week. But overall, bullish for the sector and for TCS. Yep. Looking at Infosys, you can see that is also typically bullish. Looking at the last 15 years, 60% of the time we've had a bullish move. Again, 2020 throws off the averages, but overall you're seeing more blue than anything else. So looking at Infosys on the daily chart, we are going to pull back a little bit first. We've lost momentum. We rallied up to new highs, but failed on momentum. So that suggests a little pullback, maybe back to this candle right around 1575 before we rally again. But I'm looking at possibly pushing up past 1630 this week on Infosys. So we won't make it all the way up to 1700. Again, this is a daily chart. So I'd expect a little pullback early in the week with a rally to finish off the week at a new high. And, oops, is this the old one? I keep doing that. I look at the old one. I forgot that I have the updates here. Anyway, you can see we did exactly what I said, pullback and then the rally. So anyway, we're doing it again. Oh no, this is just looking a little closer at that area. That's all it is. It's the same one, the same chart, but it was just a closer look at that tail end. That's what I was doing there. And you can see that we have a negative divergence right at the beginning of that selling pressure. So that's suggesting the pullback to about 1570 before we rally again. So that's what I'm seeing this week, is a pullback to about 1570, giving you the opportunity to potentially buy before we get up to 1630. That would be the first target. HDFC Bank overall doesn't look so great. This, the historical pattern there, 46% of the time it goes up. That's not great. And again, 2020 is dragging down the average, but overall, there's a little more red than there is blue. Overall, we've been going sideways. And we've been stuck in this range, false breakouts in both directions. It looks like momentum is really just dying off. So intraday, there may be opportunities, but again, swing trading, it looks like we're just going to keep going back and forth sideways for a little while here. ICICI Bank is slightly bearish historically. Over the last 15 years, we've actually dropped 60% of the time. It's only gone up 40% of the time over the last 15 years. And the average return is very negative, 5.86%. So we may get a push down. Looking at the chart, we have tried to recover for February. See, we had that big impulse down at the end of January, big rally February, but now going sideways, and we could not get into bullish territory for momentum. So unfortunately, ICICI Bank may drag the sector down. It looks like it's going to drop again. The ultimate target is 775. It's not going to do that this week. I don't see us dropping that fast. We had our earnings out and we dropped after the earnings. We've retraced back to that. And, there's another opportunity for many people to sell before the drop again as it pulled back. And they may take advantage of that and push it down. Looking at the sector, the Nifty Bank, or the index, I should say, the Nifty Bank typically is relatively bearish for this month. You see, for February 12th through the 23rd of March, 60% of the time over the last 15 years, it has gone down. So it is pretty bearish. And yes, it was skewed a little bit by 2020, but overall, it's relatively bearish this particular month. So looking at the weekly chart, you can see we started pulling back, tried to bounce right here. This is the origin of a little bit of buying pressure. Our previous rally at 38,000, we bounced off that, but last week we failed to make a new high. And that's showing a little bit of underlying weakness here. You see that we tried to push up, but if we end up pushing back down and making a new low without getting the RSI above 60, then we're going to drop to 35.5 without a doubt. So, if we can hold up though and maybe make a new high, we need to get above 60 on the RSI on the weekly chart for us to be able to break to new highs. So it's important to see momentum to confirm the move that's going to happen in the trend as well. Excuse me. Looking at the Nifty on the daily chart, we had an impulse down. We retraced 61.8%, but again, we've got weakness. So you see that we're just kind of going sideways here at this 61.8% retracement. It looks like we're getting ready to roll over and push down again. The next area of demand, we do have a projection target there at 39,530, but really that 39,000 is my target on the downside. And it looks like we should get there. As we break the prior low, we need to have more momentum. That's another thing to keep in mind. Otherwise, we'll get a pretty good retracement and bounce. But if we are moving below this prior low and we have more momentum on the RSI, then we will actually probably get through that demand and keep going lower. So watch out for that. A little bit shorter time frame here on the 4-hour, you can see we are failing to get into bullish territory on the rallies. So it's really just suggesting that prices are likely to go more down or sideways. And that kind of backs up what we were seeing on the bigger time frames already. So for some new trade ideas, actually some of them are not new, we're just following up on what we saw before. ABC Capital unfortunately never pulled back to my demand area to buy. It actually rallied and broke out of this consolidation. Now, I warned about this, where if it breaks out, sometimes it'll retest before it goes. As you can see, we rallied, but couldn't get above 60 on the RSI, so we didn't have enough momentum to maintain that breakout. We should pull back. So this may still become a buying opportunity if we could pull back either to this trend line, which I didn't extend, and bounce off it, or down to the 130 level. So keep an eye out. It still may be an opportunity. PNB still has not broken the demand yet. You can see we had a very weak bounce. I was looking initially to short at this supply, but it's just not strong enough to get there. So we may end up turning around and breaking that 49.15. Lots of weakness here. I still think that there's opportunity to get down to that 39 level ultimately, but it's going to take some time. So be patient. Probably won't trigger any entry this week. UCO Bank, pretty much same thing. We're just drifting. We're not really moving into our demand, but this is still pending. Potential demand zone, lots of buying pressure started at 24.5. So we have to wait for it to get down there before we can buy. IOC had underlying buying pressure, and when it came down, couldn't get below 40. And as you see, we've already hit my first target. So unfortunately, this is probably not going to let us in. I'm just going to forget about that and move on for better opportunities. And finally, FACT, F-A-C-T, actually got us our entry. You can see we came in a little bit deep into the zone, about halfway, and we did unfortunately go a little below 40. So if you did not get in, there still may be an opportunity. Okay, basically, I do not buy if there's too much bearish momentum. When the RSI is below 40, that's too much bearish momentum. So what might happen here, you see we've got indecision. I'm going to look for another push back into demand. If that move into demand does not get a new low on the RSI, then I would look to buy. If you get basically a positive divergence where we make a new low in price, but not on the indicator, that's the time to buy. If that doesn't happen, stay out though, because we could push down to this area of demand under 200. So keep an eye out for the positive divergence. That's what I'm looking for. Anyway, if you got any questions, let me know. You can always hit me up, brandonwendell.cmt@gmail.com. Please follow me on Twitter. That way you can keep updates on, I put out a lot of tweets there and a lot of information about the markets. Also, if you wouldn't mind, please hit subscribe and like for the video. That way I can continue to produce these videos for you, and you'll be notified when they come out and you'll be able to watch them. So until next time, trade safe, trade well. Take care, everyone.